So once again, thank you so much for joining us this morning. This is one of the most exciting sessions for me personally, because both the babies, if I may call them so, GIFT City and NIIF, I was part of the conceptualization and in many ways even at the time of execution. So you can see how much you hold your baby to your heart, right? And thank you so much. I think you all have done such a wonderful job. I'm very proud of what you all have done, and I thought it would be very useful. So all of you know that Mr. Rajaraman is the chairperson of International Financial Services Center Authority. It is a very interesting idea, and I remember going with Prime Minister to Singapore in 2007. At that point of time, this idea of GIFT City came up, and it was notified in 2013 or 12, and Dipesh Bhai is here. I acknowledge his gracious presence as well. And then over a period of time, I think it was still struggling, and I and Dipesh Bhai know how frustrating it was at one point of time that we have put so much of time, effort, government has put in significant amount of land, and why it is not moving, let's do something. And then learning from other jurisdictions, we found that it would be useful to have an authority that can override all the hurdles in India by and large and can make things happen at the speed of thought. And I think it was 2017, when we set up this IFSCA. 19, yeah. Look at what has happened in the last 5 years. Huge difference. It has become a global player now. I've been dealing with number of offshore jurisdictions, number of jurisdictions around the world. I think today most vibrant city in the world is GIFT City. Maybe we can have a round of applause for what has been done. And any time I had any problem, we could just make a phone call and get things done if it was fair and necessary. So again, the ability to change, the willingness to change, willingness to meet with the global markets, I think is amazing at GIFT City. Same way, I think, Sanjiv, thank you for taking this whole NIIF initiative forward. Yesterday, Mr. Siha talked about how NIIF came into being, and then we are part of doing structuring and all those kind of things. But what I want to do today, because many of you people may not be aware of what exactly these babies are, so maybe Mr. Rajaraman, can you just tell a little bit about GIFT City to the people? Because then a lot of people may not be aware of how it is conceptualized, how it is structured, and what is happening. So we can, if you can just give a little background on the GIFT City.
Thank you, Mr. Desai, and a warm welcome and good morning to all of you. I think happy to see Sanjeev and also on the panel. As Mr. Nishith just mentioned, the journey starts from 2007, and then in 2014 a number of enabling regulations were made by the domestic regulators to get the offshore financial platform called GIFT City International Financial Center off the ground. And this actually took us to some place, in fact, because people started the process of rolling out financial sector businesses out of GIFT City. There were a few early birds, but then the coordination between all these regulators showed up. So the government decided to come out with a new law called the International Financial Services Centers Authority Act, which was enacted by Parliament in 2019. So the advantage that this new law has afforded to us is that the delegation by Parliament to us of the powers under the 16 financial sector laws, which include the Banking Act, the Insurance Act, the Pensions Act, the Payments and Settlements Act, Factoring Act. There are a variety of other acts under which I think the International Financial Services Centers Authority has been enabled. So we are a unified regulator, so that is a big plus point. I think there is no case of regulatory fracture, because whatever requires to be done for a financial sector is done holistically within the authority itself. The second plus point was that we started on a clean slate. So therefore, we didn't have any baggage of historic regulations to actually carry forward. So therefore, that afforded us the opportunity to look at international jurisdictions on what they are doing in Dubai, London, Singapore, Hong Kong, etc. And then we pulled out a lot of those best practices which were time tested. So our regulations are principle based and simpler and more aligned with global regulations. So finally, though we may have done all that, I think the proof of the pudding is in the eating. So what has happened in the last 4 years is probably the outcome that would justify the work that has been done. So at this moment, we have about 31 regulations under the IFSCA Act, covering a whole gamut of financial sector, capital markets, banking, insurance, and even niche areas like aircraft leasing, ship leasing, etc. Now, how has the industry actually taken it up? That is the question, I think. So today we have nearly about 30 international and domestic banks which have got international banking units there. The total asset size has crossed about $78 billion. And today an Indian corporate would not go to a foreign jurisdiction for issuing a bond or raising a line of credit. And for instance, yesterday I think there was a very large Indian corporate, I think, which has issued an RFP for about $3 billion, I think. And they have said very clearly, please, I want only quotes from a GIFT City bank, not from anybody else. So that is a scale at which I think the GIFT City banking ecosystem has evolved. The banking system not only provides the normal products, but also there are products which are not available in India, like for instance, acquisition financing, syndicate, financing for aircraft and ship assets, and so on and so forth. Similarly, if you look at the fund ecosystem there, I think it is now fairly well evolved. I think, in fact, very recently we did an upgrade to the fund management regulations as well. So there are about 200 plus funds now, I think, with about 140 fund managers who are registered out of GIFT City. In fact, the last panel talked about relocation of funds. I think even that has been afforded. More than about 15 funds have relocated to GIFT City. I think thanks to the tax neutral relocation regime that is available. So a whole host of financial sector entities are now there. I think nearly about 750 entities have been licensed by us. And we see a very large uptake in the capital markets as well, I think, because it's just not about GIFT Nifty 50, which is, and the Sensex, which was launched recently, but also the possibilities of a variety of other products as well. So I'll stop here and say that I think the ecosystem there now is forward looking, and we are benchmarked to what the rest of the world is doing. I think we are not inward looking, we are outward looking. And our underlying bottom line is to actually provide a regulatory framework which enthuses Indian businesses which have actually set up foreign financial sector businesses to relocate back. And we have seen test cases of all that happening, and we expect also to be a very agile regulator, because the market is agile, therefore the regulations also have to keep pace, and that's what we are being up to, I think.
In fact, it must be a very tough job for you. On one side you are a regulator, on the other side you are also a promoter, and in the middle of that, the bad actors can take advantage, and how do you manage that is a very challenging position, if I may say, especially on the international financial side, where so many things are happening around the world. And so I just thought maybe you can reflect on that. I think it's a very good question,
because though of course the topic of today's discussion has not revolved around the question that you asked did not revolve around regulations. See, as a regulator, we are definitely committed to orderly development of the markets, I think, and ensuring the market integrity is protected and the investors are protected, and so on and so forth. So if you look at the bad actors, I think if I can make a specific example, we have a very sound anti-money laundering and counter-financing of terrorism regulations, which are based on the PMLA Act of India. And in the September and October of last year, there was a very intense FATF review of India, and IFSCA was also a subject matter. So let me say that I think there was nothing found, which says that we are inferior to any other jurisdiction. On the other hand, India's position, including IFSCA's position, has come out in such a way that we are ranked as one of the best jurisdictions in terms of the ability to implement regulations, in ensuring that clean money comes into the jurisdiction. So we have also have a sound supervision mechanism, and our supervision mechanism is focused on ensuring that that the nature of money that flows in and flows out is actually meets the international global financial sector requirements, and we remain committed to that. I think.
Yeah. So very quickly, because we are running short of time, we have 9 minutes. Just for the information of everybody, at 12:30 we'll have a special session in rooftop with Mr. Rajaraman and Sandeep ji. You're most welcome. I know you've got 1,000 things to do. Personal invitation. Both of them have really been very generous to me. When I called up, they readily agreed to come. So I want to thank you so much. But a couple of things on my personal thoughts. One, I think time has come to revisit exchange controls in India. I think we started with FERA in 1973 and it became effective in 1977. 1999, we went to Foreign Exchange Regulation Act to Foreign Exchange Management Act, and with so many developments happening, complications and other kind of things, we need to just revisit how do we facilitate the whole environment. But in context of GIFT City, I think we need to now move to the next level. How can we help Indian private equity, Indian venture capital funds to go and win the world? So how do we, because so far we have been focusing on India bound and all the things. I think you've done a great job. So many funds have relocated from other jurisdictions to India, and it's been very exciting. But now that is the first step. But now what we want to see is that we want to see that Indian funds go out, mobilize. Of course, they will have to put some skin in the game. But along with that, today, I think Indian fund managers have created their own brand. Just like in technology industry, you see so many CEOs from India. It is giving a brand to our Indian professionals. In fact, I have experienced recently a German company CEO, $600 billion company, $6 billion company. And he told me one interesting thing, that Indians are genius. You know, the brand that we got in the software industry to start with, it went into the CEO level. Now they are thinking any professional from India would be a brilliant professional, okay? Because at one point of time, any software engineer was supposed to be a good one. Now we have got a good brand, we can build on that, and Indian managers are prevalent everywhere. So in a collaborative way, how can we move our ecosystem from India to the world? I think this just the time has come. What are the things to be done? We can discuss separately, but I think strategically that would be useful. But I think because we are running short of time, Sanjiv ji, can you just tell about NIIF? What is it, and how many people are here who know exactly what the NIIF is? Number two, how can you help private equity industry, venture capital industry, and what's happening in infrastructure space? So if you can just talk, and free-wheeling conversation, so no
Thank you.
bars.
Thank you, Nishith Bhai. Look, it's a unique privilege today to have my co-panelists, two people who have been very much involved in the setting up of NIIF. Mr. Rajaraman was part of the Ministry of Finance when NIIF was being set up, so he's really had an inside view, and he's helped a lot in setting up NIIF and bringing it to where it is today. So if I take you back to 2016, it was in the budget of 2016 that the setting up of NIIF was announced by Mr. Arun Jaitley, who was the finance minister at that time. And the idea was that the government wanted to set up an institution which was 49% owned by the sovereign, and 51% was to be owned by international investors. And the government said that they will be an LP to the extent of 49% in all the funds that NIIF raises, and it is our mandate to go out and raise the remaining 51% from international investors. And that's how it's actually panned out. Today, the 51% is owned by a set of sovereign pension funds, sovereign wealth funds. So our largest non-government shareholders are ADIA, Ontario Teachers, and Australian Super. Between themselves, they own 31%, and then we got Temasek, CPPIB, PSP, and a few others. DFC is an investor there, and some Indian financial institutions as well. So our positioning is is quite interesting. We are quasi-sovereign, but we are fully commercial. So all our investment decisions are, and that's mandated to us by the government as well, that make pure commercial investments. We offer commercial returns to all our LPs. We operate across 4 asset classes. One is real assets, infrastructure. We have a 2.3 billion fund. We are the largest Indian infrastructure fund which is investing in the country. We have a fund of funds business, which is today $600 million. Again, the largest India present fund of funds. Third, we have a climate business where we're investing in private equity, in technology, manufacturing, and services in the entire climate and energy transition space. $300 million, it's a bilateral fund, $300 million from the Indian government and $300 million from JBIC. And lastly, we are setting up a credit business, a $2 billion fund. It's going to be India's largest credit business, private credit, focused on performing credit, and again, anchored by the Indian government, and conversations are happening with a few sovereigns to see if they will come in. The objective, as I said, is to mobilize international capital and to invest it in the Indian economy. And the key tenet that we follow is that we want to offer large co-investments to our LPs because we want to do large deals. Our LPs who are our clients, they also want to do large deals. And to that extent, Mr. Rajaraman, the Gift City is a very unique and a good jurisdiction for us. Now we are waiting for the finalization of the regulations for co-investments, and that really allows us to market our co-investment to our LPs who like to come in through the Gift City route. So look, let me just stop here.
No problem.
Yeah.
I hope you don't mind spending 5 more minutes, Raja. Okay. Thank you.
Please. Yeah. On the infrastructure side, we are builders and operators of assets. So if you see our various sectors on the digital infrastructure side, we are setting up India's largest single location data center in Navi Mumbai, 350 megawatts, and we shall be announcing a contract with the hyperscaler very shortly. We are in the process, and by the time I finish speaking, I hope that we would have signed the sale of our renewable energy business. It's India's one of the largest businesses, 4,000 megawatts, which is in operations. And the point is that these assets, bulk of them have been built ground up. We like taking construction risk because we think that we can manage construction risk. We have a large fund of funds business, and we have incubation is a wrong word, but we have backed Indian GPs right across from healthcare to technology to climate, across the entire spectrum. And we are in the process of raising $1 billion fund. And to answer your question, Nishith Bhai, that is an area through which we can help the Indian GP system, right? We would like to back relatively upcoming GPs because the more established ones don't really need our money. But the idea is to identify top-class GPs and to see how we can support them. So that's it.
Thank you so much. I have few thoughts to create even synergy between NIIF and Gift City. Of course, we'll be positioning there as well. Can we expand or consider expanding the scope of NIIF to include non-India infrastructure fund? Because in the whole value chain, for example, simple example, like power project you want to put up, like you may have to import coal. Okay, why not we go and acquire or fund the foreign coal project, high quality coal. And so you buy from them, at the same time you use them in India. So I was thinking that it's just an ideation stage, not, please pardon me if I'm overstating myself, but maybe we should try to see at least to a certain extent, we can expand the scope. Today, I think NIIF scope is only to invest in India. And if you can expand that, that would be very helpful. just at least conceptually, 10, 20%, whatever.
This is my quick response, right? India needs a lot of infrastructure and other investments. So today our mandate is to invest only in India. I think over a period of time, once we have, we can raise more money, maybe 5-7 years down the road and think of investing outside the country. But I would today argue that my LPs like to come and give us money to manage because we know India the best. Right? So the opportunity today is, I would say, more focused on
Understandable,
India
understandable. And we'll have more time upstairs at 12:30. Sanjeev ji, if you can just join, if it is possible, it would be wonderful. If you cannot, then I cannot.
I have a meeting at the RBI. So
oh, you pulled out your time, so valuable time. Thank you so much. But just 1 or 2 points for the larger audience here. Gift City gives very interesting advantages. I think in the morning I was taking this master class and asked question that Mr. Trump has now made a proposal to treat carried interest as a business income. Okay. Obviously what America does with other countries will do. Perhaps India will also try to do that. But good thing about it is that if you're based in Gift City, business income is tax exempt. Okay. If you are based elsewhere, it may or may not be. So this is one. Second, diversification rules are more liberal in Gift City. So particularly I was talking about continuing and secondary funds in the morning. And you can have single asset continuation fund. So you don't have to diversify. Third is this, that the transfer pricing regulations may not apply in the context of Gift City because continuation fund buys over the assets from the previous fund. If it is cross-border transaction, international transfer pricing regulations will apply under tax. But this is part of India for tax purposes. So again, it is not you want to wriggle out of anything, but the litigation risk, which is supposed to be major risk in tax arena, is reduced to a considerable extent because now we have to follow arm's length price, no problem. But the dispute on the valuation can be very, very huge. In fact, in the US, if you see classic case of DHL valued IP at $20 million and tax department says 600. In the appeal, of course, succeeded, but the litigation risk could be very wide, especially when it comes to intangible related companies and assets and stuff like that. So I would not take too much. Please.
Just to add to what you said, I think the tax certainty in Gift City is much higher because obviously, you don't work on a treaty. When you work from outside the country, the issues of interpretation of treaty on substance and all those will rise. So Gift City provides that certainty in taxation, I think, because of the tax holiday of 10 years is hardwired in the Income Tax Act. All the other provisions of the tax exemptions, reduced withholding taxes on debt, etc., are hardwired on the Income Tax Act. So therefore, from that perspective, I think it provides a high level of tax certainty to the investor. And finally, one more thing is that I think I would say that because since we are sitting in a meeting which relates to funds, the Gift City ecosystem offers a very cost-efficient way of managing a fund. Because you don't have a GST, you're subject to Indian costs of operation, both in terms of HR or real estate and so on and so forth. So the overall environment for the cost for the fund managers makes them more efficient when I think in Gift City. So, and especially this is more relevant because in today's environment, as LPs tend to drive down the management fees, I think the need for efficiency is something which is which is dynamic. So therefore, I think we are conscious of that, and we also ensure that we support the industry by lowering the cost of regulation. I think so.
I believe we are left with 1 minute and 48 seconds. Any question or anything like that? Yeah. Very quickly.
No, to Mr. Rajaraman, my question is very simple. It's what's the possibility of setting up a regulatory framework for cryptocurrencies and Bitcoin within the Gift City? Because this would provide, a structured environment for responsible experimentation while aligning with global best practices.
At this point of time, I think our policies are completely aligned with that of the Government of India. So therefore, from a point of view of financial stability and others, I think there are concerns around crypto assets. So therefore, I think currently we regulate financial services and financial products. I mean, cryptocurrencies are assets, I think. So we haven't got there as yet. So I don't think there is a case. I think we have in our sandbox startups which are doing experiments on tokenization of financial securities. We would be probably tapping the technology for actually tokenization of financial securities, I think. That is possibly, and probably bullion assets, I think. So that will be the possibility. Crypto assets at this point of time are not in our radar.
So GIFT City is a laboratory to experiment in a controlled environment, so you know what are the pluses, minuses, and how to develop regulations. I think time has come to look at the regulations. As you rightly said, crypto is an asset, not financial services. You have some thoughts?
Just a quick comment on the GIFT City. So look, as we're looking to raise large funds, our international LPs are quite comfortable coming in through the GIFT City route. We also, as fund manager, like that, because one way for us to improve our gross to net is to see if we can get a subscription line against our international LP commitments, and that we can do through the GIFT City route. So that's a very obvious advantage that we get through GIFT City vis-a-vis domestic AIF.
To what Sanjiv said, we are acutely conscious of the requirements of different classes of or subclasses of LPs and fund managers. So for instance, I'll just give an example. I think Suzuki Corporation wanted to set up an impact fund. So our regulations say that the maximum contribution that one can have from the FME was 10%. So we applied our mind, and we have actually relaxed that requirement subject to certain conditions, that international corporations, no money from India, etc., etc. And they have now set up their first, launched their first impact fund with 100% contribution from Suzuki Corporation, Japan. Similarly, I think there was this case of ADIA, the Abu Dhabi Investment Authority, I think. So we are also aware that I think sovereigns are to be treated differently. They are not like the routine fund managers. So our regulations have provided a light touch framework for sovereign fund managers. So if you look at our latest upgrade on the fund management regulations, we have provided a certain number of improvements over the last regulations to ensure that these special classes of investors are treated in a different manner. In fact, I appreciate the point made by one of the last panelists on there needs to be a lighter touch regulation for smaller funds. In fact, our upgrade actually provides that kind of a thing, but we will certainly look at that point. That's a takeaway for us as well, I think, for micro funds. Thank you.
Yeah, can you be a little quick and...
Thank you. This has been a very enlightening session. So, I have an FME in GIFT City, and we were one of the 15 relocations as well. I think what you touched upon a couple of minutes ago, I think for Indian institutions to participate in GIFT City, I think that's been something that we've been struggling a little bit with, where, our foreign institutions come in through GIFT City, there's no problem. But is there a way, or is there some thought where, certain investors can come, Indian investors like NIIF and others can actually come through GIFT City as well?
NIIF already has a feeder fund, right, I think. So, people let me put it this way, a large portion of our business community in GIFT City are from India, I think. They are either banks who have launched their branches or subsidiaries, or Indian brokers, or fund managers who have launched their subsidiaries or branches in GIFT City. So, there is no obstruction for that, I think. But as Mr. Sanjiv earlier pointed out, India is a capital deficit country. So the focus will largely be on how to get more capital for India. So the GIFT City vision plan is that we work as a platform for Viksit Bharat at 2047, when the requirement for capital will run into trillions of dollars, especially for net zero, for infrastructure and so on and so forth. So we will, while let me also assure you that there is also a small percentage of our funds which are doing outbound play. Resident Indians investing into it, and then these people investing in the international global securities market. So that is also there, I think. There is nothing preventing you. LRS, individuals through LRS route are investing into funds. There are corporations which are actually investing in through ODI route as well, I think. So that is also open, I think. There is no problem. We could take this offline and probably look at a specific use case for you as well, I think. You want to respond?
We already have a fund registered in the GIFT City, and we are using that for setting up a credit business. And as we look to raise our next large infrastructure fund, again, the feeder vehicle will be through the GIFT City route. So for us as an institution, Indian institution, to set up a fund in the GIFT City is like, it's quite
So
quite
you
simple.
had a question for different classes.
Maybe I'll take that offline with
Okay.
Mr. Rajaraman. I mean, the basic point I was trying to make is that, as a large institutional investor, when we talk to LPs, at times we may need to give different economics to different LPs. Now, what is the regulation right now in the GIFT City? Is that permitted, or does everyone have to be treated on a pari passu basis?
So, our regulations, allow different classes of shares, I think. So, I think, obviously, I think. So, we can give you a more detailed, discussion on this subject. But I don't know, Pawan, you wanted to say something on this, I think, maybe you can take this offline with Mr. Sanjiv as well, I think. So, let me put it this way. As long as there is a neat way of regulating a particular, special requirement, we are open to consideration, I think so. And in fact, we have a very consultative process in our regulation making. We consult the industry, and if there is a known way of addressing a specific requirement, I think we would be welcoming of that, I think.
In fact, I think GIFT City has an advantage of being able to override some of those things in the larger interest of the country and in the larger sense of the business. I think the flexibility I understand exists, but you obviously have to examine the pluses, minuses, or how it will impact the other funds as well. So I think we'll close here, but one last point I would like to make. I think GIFT City is now slowly turning into like Silicon Valley ecosystem. The Silicon Valley grew because of entrepreneurs, no doubt about it, VC, private equity, and most important thing, the educational institution. I understand about 5 universities have already been working on coming into GIFT City. So, the whole ecosystem will be built, and of course, infrastructure has always been excellent job has been done. So I think we have now the ability to develop an ecosystem somewhat similar, if not identical, to the Silicon Valley. I think it would be a very exciting time to look for. Thank you so much. We'll adjourn for the time being. 12:30 in rooftop. Those who are seriously interested, most welcome. Okay. And Mr. Rajaram, Dipesh Bhai and others, whole team is here for any of the questions that you have, any ideas, most welcome. Thank you so much for this wonderful audience. Thank you. Thank you.